Hello and welcome to Wall Street Wire News, where you get today's market in minutes. Hi, Dave Oakenquist here with Rodney Johnson, former Wall Street bond trader and special contributor to Wall Street Wire News, and Charles Sizemore, editor of the Sizemore Income Letter. First off, Charles, you've downgraded your backdrop here. You were out in the beautiful tropical area, and now all I see are a bunch of books you probably never read.
No, it's a green screen. The Pacific Ocean's actually back there still. No, I know it does seem a bit weird with an actual first world internet connection and without the wind noise and without the over the ear microphone. I think I should go back.
Well, you are looking very professional, Rodney. I'm going to kick this off to you because, guys, this is like deja vu all over again. I think it was just last week we were talking about how rising bond yields made the market tank, and it basically happened again over Wednesday and Thursday, and really after Jay Powell's comments that he said, yeah, I'm just going to let this inflation thing run, and Wall Street not very happy about it. Rodney, what the heck is going on here?
Like you said, it's a bit of a redux. The markets were looking for Jay Powell on Thursday to give some comfort that if inflation started to run hot, that the Fed would take action. And he didn't. He did say that they're watching it and they would use their tools as they deem necessary. But he gave a lot more time to the idea that we have a long way to go to get to a recovery. We have a long way to go to get employment back to where it was. And then inflation is a very, very low concern, and that the rising rates we've seen are still at very low levels, and that they are not a reason for concern right now. And he might be right in part of it, but what he didn't say is, look, we've got an eye on this, and if it starts to get out of control, we're going to take some action. And so the 10-year treasury is at about 1.5%, just over, which is a big psychological number as it rises through. Okay. We've got to remember that before all this started, we were at 1.8. And so we're not even back to where we were before this started, but rising rates eat into the value of stocks, and it just is what it is. And so with Powell saying, look, he's going to let this sucker run for a while, stock investors are saying, you know what, take some chips off the table. Made some good money last year, had a great, January and beginning of February. Now's the time to step out as all this goes on. And that's what you're seeing happen.
Charles, what kind of comfort would you like to hear from Jay Powell in terms of investments and where the stock market's going right now?
He needs to do what FDR did, those fireside chats where you hear the crackling of wood in the fireplace and soothing voice. Rodney pretty well described it. People just wanted a bit more clarity, and they didn't get that. And so we're just, the trend just hasn't changed. The trend right now is higher bond yields and the consequent nervousness in the stock market. That will continue until it doesn't, until it runs its course. I do think we're probably close to that running its course. Bonds do seem a little bit oversold right now. We'll see. They've seemed oversold for a while, and they just keep getting more so. But I think we're likely sort of close to the end of this move. We'll see.
Rodney, is there going to be any pressure on Powell to lower rates, or you say we're not even near where there's any danger?
No, and it would be pressure on him to raise rates, right? Or at least to hint that he would raise rates if these things continue. But the lie in the system, which Powell knows, this is not a surprise to anybody who looks at this. The old methodology doesn't work. This is not America circa 1972, right? This is 2021. And so 50 years ago, 60 years ago, we depended on banks for money to spend. And so if the Federal Reserve was, watching the economy, run a little hot in terms of inflation, prices are going up, then they would increase interest rates, which made it more expensive for people to borrow to go build a new factory. So businesses wouldn't be spending as much, and more expensive for individuals to go borrow to buy a house or a car or, credit card or whatever. Mm-hmm. But guess what? We have 20% personal savings in the United States. 20% is a huge amount of money just sitting there. Companies rely on equity for spending. They don't rely on bank loans like they did before. And when you look at banks, they have so much money, as in trillions, in excess reserves sitting around. Nobody's asking for loans right now. So that's not what's driving it. And so this is all about consumer spending through a very, arguably thin door. This is trying to get too many people through the door at one time as we take the lid off of economic restrictions and people go back to work and people go spend more money that they have been banking as we keep sending them cash through these, relief efforts. And so he's not going to affect that by raising rates, and he knows that. That's not the thing. But what the investment world wants is they want the psychology there. They want the psychology of saying, look, if this starts to happen, you stand ready to do something that will, put at least a mental curb on it. And they didn't get it. And so I think they're going to see more of the same.
Powell also talked about the economy recovering, obviously from COVID. We got a jobs report this morning, nearly 380,000 payrolls added last month. That certainly seems like a positive sign. Can this be something that could buoy the market, or is it just we've got a long way to go? Charles?
Well, we still have a long way to go. Now, can it buoy? So those are two different questions. Can it buoy the market? Sure. Do we still have a long way to go? Yes. The answer to both of those questions can be yes. So Powell, as Rodney said, Powell's made it very clear, if the Fed has a dual mandate to control inflation and to promote full employment, that these two mandates are not necessarily equal at all times. Powell's made it really clear that employment is his priority. The inflation thing is, well, we'll get to that when we get to it, if we get to it at all. So that's his focus. So what does that mean? Well, as things loosen up, you are going to have more people re-entering the workforce, and you're going to have more companies willing to hire them. But it is a process. It doesn't happen overnight. This was as of the last GDP report, and so this information is now dated. But after the huge pop in GDP from very depressed levels the previous quarter, the total peak to trough, not peak to trough, but peak to current contraction in the economy was still roughly the level of the bottom in 2008. So I probably didn't explain that real well, but even after a just monster of a recovery from the pandemic lows, we've recovered to what would have been the low from the 2008 meltdown.
Right.
That's how much further we have to go still. So again, that information's a little bit dated now. We've recovered a little bit more since then, but not that much. We still have a long way to go before this looks normal.
Oh yeah, I mean, we're still digging ourselves out of that hole, and seeing the stock market fall a little bit should be of no surprise to anyone, right? Particularly with a high-flying market. I want to move on to tech stocks. They've been particularly hammered this week on rising rates, and we're seeing some of the pandemic stars like Zoom and Peloton take a bigger hit. Certainly, the Nasdaq fell the most during the week. Could this be potentially a buying opportunity to get into tech stocks if maybe you missed a little bit of the high-flying action, Rodney?
Well, it's an opportunity to get into some of them, but not all of them. I mean, Zoom and Peloton are stay-at-home plays. And so Zoom doesn't make a profit. They hope to one day, right? My problem with Zoom has always been the same. They have very large, very well-funded competitors and people like Microsoft. And so I'm not sure I'd be betting on them long-term to own that market. Peloton's an expensive bike, right? And so is that trade gone because people are going to go back to work in some way, shape, or form? I think the bloom is off that rose. Now it's just, what kind of incremental growth can you get? And so I'm looking at it, and I think the opportunity is more in like the chip stocks, which have been kind of monkey hammered here over the last few weeks. And the idea that we're going to use fewer computer chips over the next, 2, 3, 5, 10 years is kind of silly, and we all know it's not true. And so I think there is some opportunity because everything goes down, just about everything goes down when the market falls. But then when the market goes up, some things are shooting stars. And so look for the ones that are really good, solid companies. And I know that's a silly thing to say, people always do, but look at the ones whose long-term growth trajectory is not based on the pandemic. And then that's where I would be looking for the rebound to be strong when it happens.
Charles, what's your take on maybe buying the tech dip?
Yeah, well, so to add on to that, how does Zoom make money? I know Zoom doesn't actually make profit.
Well, I know,
but
we pay them every month. I know that.
Yeah, well, sure. So Zoom is a subscription service. The world's going to open up. It already is. But am I going to cancel my Zoom subscription? No, we use it for our purposes here. We use it. We're going to continue to use it.
Yeah.
Even if we use it a little bit less, the subscription doesn't go away. You're still going to use it for, it's just part of the workforce now. Not part of the workforce, part of the workplace, excuse me, part of the workplace now. Now, that doesn't mean it continues to grow. However, it means it's going to have some sort of stable equilibrium. It doesn't mean it's going to continue to rocket higher in terms of use. I mean, anyone that was going to be new to Zoom, who hasn't heard of Zoom at this point, for crying out loud, right? I mean, who's that new, potential buyer that, there's going to be new companies formed that have new subscriptions. There's going to be some incremental growth, but that boom isn't going to be there, right? And so if you had projections based on the pandemic, well, that's done. I mean, that's like, those projections no longer matter. So focusing on companies that, have business models that aren't tied to the pandemic makes sense. I've never been a big fan of Peloton. To me, it's just, I mean, I'm a cheapskate at the end of the day. I get it, but I also don't like working out in my house. I need like a social element to work out, or I'm just lazy and I'm not going to do it. Right. So the idea of being alone in my house on a stupid Peloton bike, having someone yell at me on the screen is just not, that's a non-starter for me. But what does their growth look like, over time? Is this, they're looking for a Netflix model, sort of, where you still have to buy the expensive bike, and Netflix doesn't have that, but they want this to be a subscription service. So I think these models have legs. I think they're going to be around for a while, but that impetus to buy them, it has passed. So, what I still buy, maybe Amazon. Yeah, Amazon's down slightly. I think Amazon's, I don't think Amazon's going to see any slowdown when the shopping malls reopen to full capacity, and whatever, they open the doors and it's like Black Friday again. Are people going to buy less on Amazon? I'm not.
No, certainly not.
I've gotten used to never going to the shopping mall. You can't force me. Well, maybe at gunpoint you could force me to go to the mall, but I might also just take the bullet. I mean, it depends on how big the bullet is and where they shoot me. So that's a random aside, but to answer your question, I would selectively buy the dip here.
Yeah, and to your point, I believe I just saw news that Mall of America is maybe filing for bankruptcy. So it remains to be seen even what's open when things do really reopen. And no, people will not stop buying things on Amazon just because maybe a store down the street is now a little bit more open for business than they otherwise were. And in fact, I was going to Amazon because they are now trying to work out exclusive rights to stream NFL Thursday night games. And that's going to cost them a little bit more chunk of change. And could this, my curiosity on this, and Rodney, I'll shoot this to you. It's viewership, surprisingly, for sports was very down during the pandemic. When you assume more people are home, they might tune into sports. And in fact, they did not. NFL ratings are in decline. Is maybe Amazon buying a depreciating asset here?
Oh, I don't know. I mean, we rolled politics into sports. And when you do that, you're asking for somebody to be mad at you. And so it's unfortunate that we did it, but we did. And so I think that had a lot to do with it. I don't think it was pandemic. I think it was so much of the political being, tied to what was on helmets and jerseys and, on the field and stuff. And a lot of people just tuned out and said, I don't really want to participate. Whether they agree or not, they just didn't want that to be part of their sport. Sports were supposed to be the escape. They weren't supposed to be the statement. And whether or not Amazon's buying a declining asset almost doesn't matter, because Amazon is worth so much money. Who cares, right? They're going to make more in a week than they're going to spend on the NFL anyway. And so if it doesn't work out, man, it's just one more bad idea. Remember the Amazon phone? Remember that? People don't remember this stuff. They do it, it screws up, they move on. So I don't think it matters to Amazon one whit whether or not it works out. They'll just try it.
Charles, what do you think of the idea of needing a Prime membership now to watch the NFL on Thursday?
Well, I'm going to back up before I answer that. So I think the low rating for sports, politics played a role, for sure, but I don't think the role was as big as you might think. I think it's more the vibe. And I like basketball. That's the only sport I pretend to still play, and I don't play it well, mind you. I just pretend to play it. But I really tried to get into the NBA Finals, and I just couldn't get into it because without live fans, you don't have that feeling like you're there, even if you're watching it from home. Like when you see people in the stands yelling and screaming and having fun, you feel like you're part of this moment in time, right? When you're watching a bunch of grown men just dribble a basketball in an empty stadium, it's not fun. It just isn't fun to watch. Like it lacks that thing that makes sports, that communal experience that makes sports fun.
So
and the same with football.
when you strip away all the trappings, you see what it really is: a bunch of grown men chasing after a ball, and you think, "Wow, this really isn't all that interesting." Is that where we are?
Watching a rock, well, no, but like watching a rock concert alone in a stadium would also be completely lame. It doesn't matter if it's your favorite band. You might want to go hang out with them after the show and have beer, but like watching the show, if you're the only person in the stadium, you'd be bored after the first song.
But you do listen to the songs on the radio, so.
Well, you're just listening to it on a really boomy system and whatever. So it's like the whole purpose of being at a concert is to have that human experience, that communal experience. And so sports were in the toilet for 2020 because that was dead. And it's still dead now. Like they're not really opening it to fans fully. Now, second half of the year might be a really different story. I think sports are going to come back in a vengeance. The political stuff comes and goes. I mean, in the 70s, things got political too. It's a distraction, but it comes and goes. I think like when you have the energy of the crowd there, sports will be back with a vengeance. If Amazon is overpaying for football, who cares? I mean, they have the money. It doesn't matter for them. It's more about brand building and establishing themselves as, hey, we're a place that you can go for sports now too. This is just one more thing we offer. We're not just a place to buy whatever, fill in the blank on the internet. We're a media company too. So for them, it's more about building the brand. Whatever they pay is chump change.
I tend to agree. It is interesting how even watching something in your own home is actually a social event. It's something like sports, and that rise and fall of the crowd, it does add to the drama of just people running, bouncing a ball. But I think it's also something else. I think people are really tired of commercials, and to watch an NFL game, unless you're really invested in it, you got to plunk down for a good 3 hours, at least 3.5 hours, versus what's just on. I can watch my Prime show or my Netflix show right now, and it's not going to stop in the middle every 10 minutes. And maybe I just don't have the time to sit through this thing. So I'd be curious. That'd be interesting.
Well, so commercials. So soccer games don't have commercials.
Yeah, that's what I was going next.
Yeah. And so my kids are big soccer fans. I've had to become a soccer fan in order to have something to talk about with my children. I just acquiesced. Like if I'm going to have anything relevant to say to my kids, I have to at least speak their language, which means I have to know football. Anyway, yeah, soccer games are, even without commercials, they're also lame because there's no crowd noise. Like the crowd's going fanatic, ripping their shirts and screaming when there's a goal and throwing their popcorn in the air, whatever. That's part of the experience. And so until that comes back, sports are just dead.
To that point, Charles, it's a good point. It's perhaps, of course, not having the fans in the stadium is one thing. Sitting at home, you're not having that shared emotional experience with the fans. You're also not having it with other people that you might have been watching with in previous years because you weren't allowed to do that. And you weren't going to sports bars. And I think I certainly tend to discount the notion of going to a sports bar to watch a football game or baseball game or anything. But it's huge business, right? I mean, the alcohol providers, everybody lost a bunch of money last year. I mean, last March, the people that had to throw away all the wings that they make, buffalo wings with, because they just couldn't sell them because, the March Madness and everything wasn't going to happen in bars.
Yeah.
And so there is something to that of diminishing, I don't know how much, but diminishing the viewership of games across the different sports over the last year.
It is, interesting. Well, it does give a little hope then for sports fans and those when things finally open up. TBD, but when that happens, maybe we could get back to having some enjoyment out of watching sports. But so it's interesting. Maybe like I suggested, buying the tech dip. Maybe Amazon is also buying a dip, maybe on an asset that might be a little cheaper otherwise, and could be more valuable in the coming years. I want to hit a final topic here. This one I think is really interesting, and it comes comes from Wall Street Wire News. As alternative beverage segment keeps booming, you can now buy CBD-infused sparkling water. And this is a larger conversation about how the beverage industry has changed. Certainly, everyone now knows what a White Claw is. There's a million different kinds of seltzers. People are moving away from what used to be the IPA craze and thinking, wow, this thing just tastes a lot better. It's a little bit smoother, does the job. And, I don't feel like I just ate a loaf of bread or something like that. And now, Rodney, there's also things like CBD-infused beverages. This is a wild space, isn't it?
It is, and it's the whole idea of CBD being component of the hemp plant, which is a close relative of cannabis. And this is not THC. This is not what gets you high. This is what is supposed to have some relaxing properties. And it works for some people. There's no question it does. Doesn't work for everybody. And so it's the tip of what is supposed to be the iceberg of getting these sorts of components into drinks, where you can drink and perhaps get a little bit of a buzz or relaxation. But like you say, you're not drunk in the sense of what you get from alcohol. The problem is that with THC in particular, the taste always has a bit of an oily / soil taste, apparently. And so it just hasn't worked. There isn't one yet that people go, wow, that tastes really good. I'd like to drink a lot of it. And so I don't know about the CBD drink. I haven't had any of them, but I'd be interested to see how well received they are just in terms of taste.
Charles, what do you make of the crazy rise in seltzers and now expanding into many other different kinds of, well, I don't want to necessarily call it an intoxicant because CBD might not be, but what do you make of this space? It's been fascinating to see when seltzers first hit the shelves. I know like a 12-pack was like maybe $12, and now like White Claw is like $17. I find this really interesting in what's going on in the beverage space.
Well, there's a demographic angle here, and I reached the conclusion that my generation was really just a bunch of degenerates. We really, we drank too much. We partied too much. We just did a lot of stupid stuff. And I feel like younger people are actually more sober. They drink less. They get drunk less. When they do drink, they don't drink as much. They drink in fewer settings. And when they do drink, they drink less. Mm-hmm. They're actually just cleaner living than we were at a comparable age. And part of what you see is changing taste in alcohol consumption. Things like an alcoholic sparkling water, that's a lower alcohol content than a Jack and Coke, right? I think that part of this is just, the younger people, and by younger, I guess just say anyone 30 or younger, kind of the tail end of the millennials and, Gen Z or whatever. Just kind of everybody younger than 30, let's say, they are just more health conscious. And so they still want to drink something. They still want to have fun. They still want to hang out with their friends. This move towards the alcoholic seltzer water or whatever, drug infused seltzer water, whatever it is, all this stuff is kind of a slightly healthier, slightly cleaner way of just, going to a party. So I think this trend probably has legs. I don't know that specifically, cannabis infused seltzer water is the wave of the future or whatnot, but just healthier ways to drink, healthier ways to enjoy a party. I think that's a trend with legs.
And some of White Claw is owned by Boston Beer Company, I believe, and we've got Coca-Cola, Constellation Brands, Anheuser-Busch, and Canopy Growth is the one putting out the CBD. Ronnie, you kind of poo-pooed the idea of THC because of its pungency in terms of on the palate. But could we see? I expect this to happen in certain states that make it legal if they can get around some of the hurdles, or if laws are relaxed. Could we potentially be seeing an alcoholic THC beverage coming down?
Well, they don't combine the two, but Dixie Brands has been out there for years doing this. It's not like it doesn't happen. It means that they just haven't taken off. Where it's nationally legal, and part of this is because you can't bottle it and take it across state lines and all those things because of federal regulation. But if you look at other nations like Canada, where it's legal across the nation, they're just not seeing a huge take up of this. And the report is because it's the taste. It's just got something to the taste. I got to believe that somewhere is a chemist who's going to fix it, right? This is a problem that somebody in a lab is going to make happen. It just hasn't happened yet.
Some talented mixologist is going to figure this out.
Yep.
There's a local brewer here that they basically market their hoppy IPA as a pot. They give it a pot name because the similar the hops and THC or parts of marijuana have a similar scent profile. So it's interesting. So I think that's an easy way in, I guess, if people want to do that. But sort of thumbs up or thumbs down, guys, bearish or bullish in the beverage space?
I'm bullish because I think a lot of people will take it up. Will it last a long time, or is it just a fad? I would think a fad after a while.
Charles?
I'm on more or less on the same page. I would say the broader theme that I'd be bullish on is just healthier ways to consume.
Great. Well, that is our show today. I want to thank you all for watching. Please sign up for our free newsletter at wallstreetwirenews.com, where you can get today's market in minutes. Rodney, when they, what kind of stories do you have your eye on next week? The people want to maybe be keeping their eye out on, and if they're getting stories from Wall Street Wire News in their inbox.
Well, I think it's going to be all about the relief package combined with the states opening up and potentially psychologically driving the notion of inflation, pushing rates and killing the stock market. I know that's a lot, but it's this one swirling pot of a witch's brew that is what people are going to be talking about.
Charles, what do you have your eye on, and how can people find your work?
Yeah, so I'm real curious to see if this rotation out of tech and into kind of more gritty industrial plays, if it has legs. That's what I'm watching right now. And as for where to find me, just sizemorecapital.com.
Great. For Rodney Johnson and Charles Sizemore, I'm Dave Okenquist, and have a great trading day.